The question that I think is on the tips of everybody's tongue is, do we make a new high? And I'm not going to be surprised if we do. But that doesn't mean we still can't roll over. Distribution inherently is a very choppy, somewhat unpredictable market trend. I think we all know that. We also know that the sole reason that we are up at this zone is because we had positive news about the US-China trade war. So incrementally, we're going to see different aspects of phase one broadcasted to the market. The market's going to continue to buy it. That's been the way it's been since October of 2018. So you might say, is there enough of that to go around to break us to new highs? You know, I'll tell you what, having all-time highs on the other side of a breakout, not just October highs, all-time highs, it's a sobering thought. And I think there's going to be a lot of selling pressure waiting at that level. So a break, a pierce of 3,029.5 doesn't mean full steam ahead for uptrends. In fact, even though we do have another series of dots right now indicating this could be very bullish, remember that we had that the two times that we exhausted here and here. So we've had that already. So my answer to the question about whether or not we could break out, I'm fairly indifferent to it. At some point, I'm going to be reaching a threshold on the puts that I own on the S&P, and I'll have to look at the threshold that I have, whether that's 2.5, up to 5% of my account value, and 50% individually on the option premium value. But this is not the only place we have skin in the game, and I think it's really important to remember we want to have a certain indifference to this, meaning indifference is really easy to come by when we have diversification on ideas. So if we break out to higher highs, if we do, yeah, I'm probably going to have to take some medicine. It hasn't happened yet, and I haven't reached those thresholds in my individual positions. But I also have long positions that I think are far superior to long positions or short positions in the S&P. And that is, again, it's not all about the S&P and the NASDAQ, and am I consistently buying pullbacks in ITB, XHB, XLRE, and XLU, the latter of the two, which are pulling back to buyable levels. So if the markets, meaning S&P, NASDAQ, Dow, Russell, continue higher, yes, I mean, I'm going to have to take some medicine on some of those positions. But I also think I'm going to continue to benefit from long positions that I put into these markets, ITB, XHB, XLRE, XLU. So I think I'll continue to benefit from the bullishness that I have in markets that are clearly, I believe, much better uptrends. So to kind of loop back to the S&P, I am still viewing this as an overbought zone. I do realize that this market has been very easy to influence with incremental news about the trade war. That's been the case for a really long time. I can't be surprised that's happened again. But I'll tell you, where we are right now is the upper end of that zone, 30.20, 30.29.5. And for there to be a meaningful breakout with volume, meaning significant participation where people think, all right, it's time to break out, I think that's not going to be as easy to come by. And I also believe it's not anything that we will buy, because if we get that breakout, that means the next pullback to the likes of, say, 29.87 down to even 29.51 would be a potential buy for us. So I'm thinking not just what will I do if we break out, and therefore can I start buying pullbacks, but I'm also thinking, let me not be so, concerned and really almost tunnel visioned to what NQES, YM are doing. And remember that the pullbacks in XLE, XLU, I believe will continue to pay dividends for us, because I believe I benefit on weakness in the broader averages and continued strength in the broader averages. So that's the sort of focus. And again, it's not all about the S&P and the NASDAQ, right? Great topic to keep reminding ourselves of as we go into next week.